Welcome, everybody, to the Real Dealz podcast, one of the top-ranked real estate investing podcasts for the last 7 years. This is the place to be for investing strategies you can actually use, expert interviews, and, of course, some good old-fashioned entertainment. Now, here's your host for the show, Elliot, the REI guy, Smith.
What's going on, Real Dealz podcast listeners? I got another great show for you guys this week. Actually, this is going to be quite a bit different of a show. So it's not going to be the rah hoop, get you all excited about, real estate. You can do this, guys like that. But what it is it's a couple professionals, one doctor and one lawyer, and they are both buddies of mine and lenders. And we talk about how to raise money from professionals that have really high incomes, that like real estate or don't even know that much about real estate. And how do you get to know them? How do you raise money? How do you make them feel safe? How do you pitch them? And this show is so informative. I hope you listen to the entire show, because if you're trying to raise money, whether you're just doing your first couple flips or you're doing apartments or you're doing development, this is a show you really want to listen to, because this segment of people, doctors and lawyers, they have a ton of money. There's certain guys, not saying these guys, there's a lot of these guys are making $300,000, $400,000, $500,000, $600,000 a year, and they're paying the most taxes in the middle, as anybody else out there. And they want to put their money somewhere and grow that seems safe and secure. So anyway, you just got to find a way to make them understand it. And this is a way for you to learn how to do that. So what's going on with us this week? We are just rolling right along. We tied up another 16 unit building, and it's actually right by the 31 unit that we got under contract a couple weeks ago. So really excited about that. And so that gives us, 47 on that street plus a lot to build 6. That gives us 53 on that street. So that's going to be really good. And then we got a couple flips that we sold, went pending on. And then haven't bought anything recently. We are working on doing a rezone, actually a comp plan change on a property. So I have no idea what the hell I'm doing with that, but I'm going to go for it and try. So I think there's a lot of opportunity there. But other than that, not much rolling. Other call centers going good. Leads are up. People are doing deals. Can't complain about life right now. So anyway, I want to get you guys in this show. I think it's going to be so good. It's going to be one that you're going to want to listen to a couple times, pause and rewind, definitely take notes. But this is a very, very important show if you are finding deals, which you most likely are if you're listening to this show, and if you're looking to raise capital. So, all right, guys, have a great week, and I'll talk to you next time.
All right, Real Dealz podcast listeners, I want to talk quickly about our show's sponsor, Ironbridge Lending. If you guys have not reached out to Ironbridge already to talk to them about funding some of your upcoming flip projects, I highly encourage you to do so. I've known the owner of Ironbridge for a very long time. I personally borrowed millions of dollars from them over the years to do a number of different projects, and I can say without a doubt, they are the best hard money lending company I have ever come across, and that is the reason why they are the sole sponsor of this show. I've had a lot of other companies reach out to me and want to sponsor this show, but I just won't do it. I feel like I need to be genuine in who we have sponsoring the show, and it needs to be somebody that I've personally done a ton of business with. So I personally vouch for their ability to be the best, hands down, in the world of hard money lending. You won't find better programs, you won't find better terms, and they're lending or will be lending in over 20 states. So chances are, if you're hearing this in whatever state you're in, it's definitely worth it to check out their website, reach out to them, see if they're lending in your state, and if they are, I would absolutely encourage you to do business with them. Another very cool thing to note is that they have a program for most rehabs where you can actually borrow up to 90% of the purchase price. Now, this is given the fact that you are actually buying a deal, which if you're listening to the show, that means you probably are. But if you have an actual deal on the table, they'll fund up to 90% of your purchase price, and they'll even give you rehab funds on top of that, which means that it only takes 10% down to get into a project, which is unbelievable in the hard money world. So do yourself a favor, reach out to Ironbridge Lending, have a conversation with them, see if they're a good fit for you and for your next project. I can guarantee you that you'll be happy that you did.
What's going on, Real Dealz podcast listeners? I'm here with a unique kind of show, and I've been thinking about doing this show for a couple months now. But I have two buddies of mine that are professionals. One's a lawyer and one's a radiologist. They make really good money in their career, but they also invest in real estate, and they also lend money to people that invest in real estate. So I've talked a lot about in the past about people saying, you do what you're really good at and let me do what I'm really good at, and then, invest your money with me. And so these guys, we're going to talk about what they're looking for in investing for their personal lives, and then what they're looking for if they're going to invest in somebody else. So Richard, how's it going?
Pretty good.
Good. Randy, how's it going?
Excellent. Thanks for having us.
Awesome. All right, so I'm a little stuffed up. I got a little cold, so you guys are going to do most of the talking tonight. So, Richard, why don't you start off and just tell us a little bit about who you are, what you've done, what you're currently doing in investing, and go from there.
So, I'm a radiologist by day, I guess. And so I got into real estate investing when, I guess way back in the day, I bought a condo when I was living in Salt Lake. Had a roommate, actually I had a couple roommates. And so it helped, my carry costs, so to speak, right? I had my mortgage. And so I had a couple roommates just to help pay for that. And then got married when I was leaving Salt Lake. Long story short, there was an issue with the condos we bought. And it was brand new build, but there was an issue with it. And so my condo wasn't eligible for, I think it was like FHA lendings, or 99% of like the typical loans that people would get to buy a house or a condo. And so I was stuck with it. And so I found a property manager and I was like, okay, I guess I need to rent this out until everything gets fixed. And so that's how I started in real estate, and bought a couple of fourplexes in Washington, and then met a real estate investor down in Florida. And I've bought a bunch of stuff down there since.
Nice. And so you're currently living where?
Washington.
Okay.
Yeah.
Awesome. And so was there issues with like on the defects of the property? So they screwed something up on the property so they couldn't finance it? Is that what it was for the condo?
Yeah. I mean, I didn't know anything about condos other than like Asian people have like stereotypes. And one stereotype I'd heard was never buy a condo.
Yeah.
So I did that.
That's funny.
Now I know why Vietnamese people are against condos. But yeah, it was like the stucco on the outside was faulty, and it somehow passed, like inspection, right? But then I guess the guy that put it on and the contractor that put it on, they messed up. And so long story short, there was, I think, like, I don't know, it was like, I think a $10 million project to rip out everything, redo all, like a bunch of the, the framing that was rotted. And so because of that.
Did the HOA get stuck with it, or did the contractors have to fix it?
So the contractor declared bankruptcy, the stucco guy died, and then we went after the insurance, and we lost our lawsuit. And so, yeah, the HOA got stuck with it. And so all the homeowners got assessed a huge amount. So
Gotcha. That sucks. That's the problem with condos right there.
Yeah. I mean, that was a 5-year deal. Like, from time we like said, hey, there's an issue, to end of like lawsuit.
Do you still own it today?
Yeah, I still own it today. Yeah.
Nice. Does it cash flow?
Yeah, cash flows. Yeah.
Nice. And one more question. How many rentals do you own?
I don't know. Like 30?
Okay.
I guess 30 doors.
Nice. Awesome. All right, Randy. What about you?
Well, first off, I need to check my condo, make sure maybe I should sell this thing sooner rather than later. Let's see. I'm an attorney by day, patent attorney more specifically. My start in real estate, it was a little bit more conscious. I actually I read Rich Dad Poor Dad like a lot of people. And then I started listening to some podcasts. And then I decided that's what I wanted to do. So I bought 2 rentals in the Dallas area before I even bought my own residence.
What year was that you bought those?
2010, 2011.
Ooh, good timing.
Like yeah. Just kind of luck more than anything else. Everything since then that turned into gold. And then I just kind of kept buying there until a couple of years ago when the numbers stopped making sense. And then was just trying to figure out what to do with my money. And that's kind of where I bumped into Elliot. And then he kind of told me, hey, if your money's just sitting there losing value, you can put it to work sometimes until you find the next deal. And I was like, okay, yeah, that makes sense. So that's kind of how I started down the journey of kind of private lending, in addition to what I really wanted to do was just kind of own some rentals.
Which, knowing that was your goal, we actually now own an 8-plex together.
Yeah. So a lot of, like a lot of people say, it's a relationship business, right? People don't kind of partner up with people unless they have a good relationship working with them. And then kind of sometimes private lending might be open some doors for you that you may not otherwise be exposed to. So I think all in all, it's a good opportunity.
Awesome. And we met because you called me off the Bigger Pockets podcast, because my first show that I did. And you called me out of the blue.
So yeah.
Yeah. And that was
like, this guy's interesting.
Yeah, the funny story is that was the best thing that came out of that show by far. Like, I was like, why did I even do this? My business partner was like, why are you doing that? You're just telling everybody what you're doing. And then I remember exactly where I was. I was driving to Portland at the time because I was still going back to Vancouver a bunch, and I was right outside of Hood River. And you called me, and I'm like talking to you. I'm like, who is this Yahoo? And then you told me you work for Titleist, and I'm like, oh, we should be best friends. And we talked for like 30 minutes, and the rest was history. Yeah.
Yeah, I mean, I think when I first called you, I was just kind of looking to, that's when around the time the deals started drying up in Dallas because everything got so inflated. I was just kind of looking to see what opportunities there are at different places. And at the time, it didn't even really click for us to kind of have an opportunity to work together. I think it wasn't until 2 or 3 years later we reconnected and kind of did that first private lending deal. So you just never know.
Yep. And how you, and guys, just for out there, how Randy got into the deal with us was, I knew what his goal is. So as an investor, or the guy that's trying to raise capital, knowing like what Richard's goals are, Randy's goals are, and trying to tailor situations. So I told him, hey, your money's sitting there, you're not buying any deals. Why don't you loan it to me on these properties at 10%? And if you need it, I'll go get money from somewhere else. If you need to have a deal pop up, and I'll give it back to you. And so he just never had a deal come up. And so we just kept moving it from deal to deal to deal. And then I knew he wanted rentals. So in the back of my mind, I was always thinking about, how do I get him into a rental? And then we had an 8-unit pop up, and it worked out really well. He had the right amount of money, and I had the right deal, and we just kind of went into that deal together. And so understanding what their long-term goals are and trying to be the person that provides the opportunity for those goals.
Yeah, worked out well for everybody.
Like, what is your main goal, Richard, with your real estate investing? Like, what's your goal right now with, work-life balance? I know you guys both have young kids. Or you want to build a huge portfolio, or what are you kind of looking to do?
Yeah, I'm not looking to build a huge portfolio. My goal is to save enough or buy enough rentals that when I want to retire, that it's replacing, a certain percentage of my income that I figure I'll live off of.
Gotcha.
Is my thought process. So yeah, no, I'm not like the Bigger Pockets guys that are like, oh, I'm going to scale. I'm going to have like 2,000 units or, whatever. So
yeah, those guys are jokes as I'm building scale. But I a lot of those guys actually, they might say they own 2,000, 4,000 units, but they syndicate them. So they only own a little piece of them. I'd rather own 50% of 200 units or 100 units or 100% of 50 units, right?
Yeah, and that's where I think I am based upon some of like my exposure to like syndication. I kind of want to own more of the stuff, and I'm willing to take less return, just.
Have you done syndication before?
Yeah.
How's it worked out?
Mixed bag. I read I think the book that's like recommended is like, isn't it like Brian Burke or something? Like a passive like investing in syndications or something like that.
One of those, yeah, one of the Bigger Pockets.
I don't know. I heard about it on Bigger Pockets. And so I've done a couple things online, with online platforms, and yeah, it's like interesting. Yeah. I'll say I'm pretty bad at vetting online.
Yeah. What about you, Randy? What's your kind of goals in life on this stuff, on the real estate?
Very similar to Richard, but neither of us are stuck in dead-end jobs or we're trying to get out immediately, which I think a lot of people starting in real estate is dying to do. So they're looking for cash flow to replace their income. And I think for us, that's kind of the point, but not really. We just kind of want to put our money to work and obviously have the flexibility of not having to put in 50, 60, 70 hours a week when we don't want to. I think right now, even though I think we both enjoy what we do, the work is demanding, right? They don't pay you doctor/lawyer money to sit around and do nothing. So I think our goal is kind of similar in that we're just trying to look to put our money to work.
Gotcha.
And also similar to Richard, and I don't think we're in the minority. We're willing to put a little bit more research and get, better deals than what the standard syndication deals are. We want a little bit more control. We don't just want to throw our money into a pot and just pray for the best. So that's kind of why we're looking out, trying to meet the right people, trying to talk to the right people, and then trying to make sure we make the connections and then find the deal that works for us.
So on that subject line, and this is a question for both of you too, but we'll stick with you, Randy. What do you look for in somebody? I know, Randy, I'm kind of your guy, but what do you look for if somebody comes to you, say they have a deal, they want to raise money, they want to do it. How do you vet that person? Like, what is your red flags? What are you trying to find out? Things like that.
I think it's more of a relationship-based thing. Having worked with this person in the past really helps, but a lot of it also has to come to the right deal, right? I've been pitched a lot of syndication deals by really close friends of mine, buddies in law school, their buddies in real estate. And then syndication just isn't for me. I don't like being a limited partner in things where I have zero control over things. So I think you got to know your target audience, like what Elliot said earlier, kind of know what their goals are. And then other than that, I think you just start building rapport and trust with people. I think, and then it's a leap of faith on the first deal, definitely for both parties. But other than that, I think the key thing is figuring out the right deal and what the people are looking for.
Yeah, no, I agree with what Randy said. I mean, I've been pitched all sorts of stuff, and it's tough. Like, I mean, everybody's like trying to put their best foot forward, right? And so you can't go by the pro forma or numbers, right? Because, I mean, somebody comes to you and says, "Hey, I'm going to lose your money." It's like, you're not giving them their money, and so everybody's like coming with their best foot forward, and they're like, "Oh, they're going to promise you these great returns." Da 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 da. But yeah, I don't know. I agree with Randy. It's for me, like, I think it's like a big trust issue, right? It's a huge trust issue. And yeah, it's a slow process. I mean, you've dealt with it, Elliot. Like, it takes a while to get to that point where people are willing to, give you money. So
yeah, because I've heard a lot of horror stories. I mean, even here locally, of guys losing people's money. And I think it's not with ill intentions. I think the problem with a lot of investors or people, they look at things through rose-colored glasses. And they try to make deals work and say, "Oh, it's here right now, but the market's going to keep going up in 12 months. It's going to be right here." And so they're basing their pro formas off of these pie in the sky numbers, which, Randy, as we've gone along, that I don't do that. And it's always like, I always sell the house for way more than we said we're going to sell it for at the end of the day, or things grow, do what they say, because I don't want to be called a liar, and I don't want to lose somebody's money. And so, most of all, I don't want to lose my money either. I don't want to have a bad deal, because once you screw one lender, I mean, this is a small town, that word gets around pretty quick. So, and what was the one thing, Richard, that you told me when I was pitching you that deal last year, that the most important thing was?
Yeah, like my friend in Florida, he always talks about, like, not every deal is the same, meaning like, not every 10% deal is the same. And he was like, you got to look at, the return adjusted to risk. And he was like, and so, yeah, I think that, like, when I look at deals and I'm listening to people, if they're not, I guess, being realistic or kind of giving me the full story, I kind of like, I kind of shut off, and maybe that's probably bad, but like, I want to hear what's going to go wrong. And I want to hear, okay, well, what's your stress test? What happens if, interest rates like skyrocket or something like that, or what's what happens with the whole, and if they can't adequately answer that, then, it's like, well, you got to think about that, right? Because, I mean, I've been in my medical practice, like, everybody's happy when we're making money, but man, when it slips, people are at throats. And so just seeing it like before and dealing with it before, like, yeah, you kind of want to make sure that whoever you're investing with, like, okay, everybody's got reasonable expectations, and and communications, like, happened, and everybody's like on the same page. So
because there's a lot of uncertainty in the market right now.
Oh yeah,
there's a lot of things going on. Fed, now people think that when the Fed raises their interest rates, it's directly correlated to mortgages, which it's not. It's just a rate that they pay. That's the interest rate that they're charging people for the money. But 4 rate hikes this year, rates will go up. The Fed was buying $50 billion a month in mortgage-backed securities. That was 1/3 of the market they were buying every month. So $150 billion a month in mortgage-backed securities were selling. and a third of it was being bought by the Fed. So when you take that big buyer out, supply and demand tells me there's going to be a lot, lower demand from these investors because they have a lot more deals to look at. So all of a sudden rates are going to do what? They're going to go up. And so this is a weird time. Everybody's making a ton of money right now. If you bought real estate in the last 2 years, you're looking like a genius. And so you can't, are you guys really paying attention when people are pitching you stuff like, okay, you did really good on this last deal that you bought 2 years ago, but like everybody did really good. Like, are you guys taking that into consideration as well? Like if you're looking at deals in your factor?
Yeah, I think so. I mean, there are a lot of people from what they say that's in real estate right now that's never really experienced the 2008 crash, right? So everything they've known is up, 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 up. And I don't know if they're prepared to kind of know what to do if it doesn't go up, right? So I think that's kind of looking for people that's has some experience, that's been through the 2008 recession. It's kind of something that is helpful. I don't think it's a necessity, but there's a lot of people I feel like they're getting in because it's easy money, and they don't know what to do if the market turns the other way, right? So I think that's definitely something I'd look into, and I'm sure Richard considers as well.
Yeah, like I didn't go through the crash, and so like I don't know, but like right now we're underwriting these deals, the multifamily 31 unit that we tied up, we're underwriting at 6% interest rates. Now, do I think interest rates when we refi it back out will be 6%? No. Maybe 4.5, maybe 5 at the highest. But, what happens if, let's say it's 6% and say my rents don't go as high as I think they will. So let's put them down 10%, 15%. Do I still cash flow and can I still pull a refi on it without leaving a ton of money on it? I think there's going to be it's hard to have a 2008 level crash, I think, again, but I think it's either going to be a dip or it's going to be a lot bigger than 2008. And if it's a lot bigger than 2008, we're all screwed anyway. I think at the end of the day, no matter who you're with, they're all screwed.
Well, if you got to sell, see, I disagree with that. That's part of the reason, I've kind of shied away from the syndications, right? Like, if I have properties, right, and I don't need to sell.
Yeah, right? You're 100% right on if you need to sell. If you're doing short-term projects like developments and you're building to sell, things like that. Yep.
Yeah. But I think that kind of what Randy hinted on earlier, we're in a good position. We have great jobs. Yeah, they're stressful, but we have the liquidity and we can kind of ride out, drops. And we'll be at least I'd be looking to buy when it's dropping. Right. So.
Yeah, but that's only if you have control, right? I think if you get into some of these syndications where you have no control, not everybody is in the same situation financially. And when they're forced to fire sale, that's kind of where I don't feel comfortable with some of these syndications. Is I really have no control over what they want to do.
Yeah. I was talking to this guy, he owns Bridge Equity. And so they own 48,000 units. And what he said in 2008, the guys that lost, most people that lost their butt were the developers, the guys who were doing something to sell it, right? But the multifamily guys, most of them were fine, but the ones that did lose their ass were the ones that had loans and debt maturing, because the debt on commercial loans is a lot shorter time cycle when it matures. And they were maturing in 2008. And it's not that their property wasn't performing, but it was that the banks dried up. So liquidity dried up, credit dried up. So they couldn't get a loan. And so they ended up losing the properties, not because their properties were bad and they weren't making rent, just they couldn't get a loan. And so I think that's something to consider as well. And Randy, that's why we're 1 year into our 5-year loan, right? And I've already been pressing hey, let's get longer term financing. Let's make sure we're not screwed here coming up, right? So now, Randy, you've told me one thing. You have buddies down in California that are making $1 million a year, because I've asked you to raise money from some of your other friends down there, and none of them ever seem to have money. Yeah. Richard, I'm sure you have the same thing. You got guys that are making $5-6 million a year, but never have any money. Why don't you both talk about the importance of building wealth and being high income earners, but actually living within your means, and what you've kind of seen with your other colleagues that even though they're high income earners, they're still broke all the time, but they have nice stuff.
Yeah, I don't even know if those people are listening to these type of podcasts, to be honest with you, because if you're listening to this type of podcast, you're part of this target demographic that's looking to invest, right? So I don't even know if I'm going to really be helping, quote unquote, my colleagues. But I think to answer this question, I think it more sets the expectations of people that are trying to raise money. you look at people like doctors and lawyers are like, oh, they got money. Yes and no. People make a big chunk of us make a lot and spend a lot, right? And then the ones that don't spend everything that they got, it's hard on cash, right? It's sweat equity, right? So it's kind of hard for us to even part way with them, with our money, unless we feel 200% comfortable. And I think that's a threshold that's hard to cross. Let's say you got 100 lawyers and doctors, half of them already spent their money. The other half that actually has any money left, you really got to earn their trust before they're willing to give you any penny of it. And sometimes that's just difficult. And I think for people in the real estate industry that's trying to raise money, you really got to focus on building that relationship and then trying to work on that, because 50 grand, 100 grand, 200 grand in a grand scheme of a deal is not that big of a deal for people that's used to real estate. But for people that work a 9 to 5, 100 grand is a lot of money.
Because it's after tax dollars too, because you guys don't get the tax benefits. So you already paid taxes. If you're California, you're paying 60% in taxes. So you're only getting to keep 40, and so you worked your ass off for that 40%, right?
Yeah. So that's kind of my experience. Like I said, I don't know if I can tell people and my colleagues how to.
Yeah, that's a lot better way to put it. Thank you. I think that was a better than the question I asked. I agree with that.
Yeah.
So
any insights, Richard?
No, I agree. First off, I don't make $5 or $6 million if radiologist, Elliot, or
no, I said 500 or 600,000. I thought. Sorry. No, I thought I said 500 to 600,000. Sorry if I misspoke. Yeah.
But yeah, what I would say, and I'm
not saying that's your guys' income. So anybody's saying, I'm just saying high income.
Sure. Yeah. What I would say is that at least for doctors, I can't speak to lawyers, but for doctors, most of us are W-2, and so as you alluded to, we don't get a bunch of tax benefits, and we're the highest tax group of people in American society. So I have no way to shelter money. When I talk to my real estate friends, when I talk to you, and I talk to my buddy down in Florida, he's astounded at my tax rate. He's like, "You're paying what?" And I'm like, "Yeah, man, I can't hide any of this. The government gets their paws on before me because I'm a W-2." Yeah. We might make a big salary, but a lot of it just is gone. Yeah. It's gone to the government. And so like Randy said, now we're looking at after-tax money. Well, most of us are coming from undergrad loans, med school loans, which have far outpaced inflation. So most of the young guys, I feel bad for the guys that came after me. When I talk to my new partners, it's not unusual. They're like, yeah, I'm already in the hole for $450,000, $500,000. Oh, and by the way, thanks for hiring me. But yeah, you got a massive practice buy-in on top of that. And so when you're looking at raising money from these guys, yeah, we might be making money, but we have a ton of liabilities. We have a ton of liabilities, at least early on. And then once those get paid down, okay, yeah, we can talk about, investing. But then it's, American society, again, like Randy said, I think he made a great point. People that are, driving Lamborghinis and, living the life, they're not listening to you, Elliot. They're not listening to Bigger Pockets. It's a select demographic of people that wants to invest and build wealth. But yeah, and I totally agree with Randy though. If you can live below your means and, do some of the stuff that you hear on Bigger Pockets or you talk about and put some of that money instead of spending it, yeah, your net worth will grow. But it's, at least for me, it's been slow growth because I'm passive. I'm working most of the time as a doctor or I'm a dad. And so I'm not getting crazy returns, and so it's slow growth, and some people don't like that either. So
yeah, well, because that whole Lamborghini driver is also the guy that wants it fast, right? Quick money. Yeah. The one thing about both you is that I highly respect about both you guys is you guys are both extremely hard workers. You're good family men. You've done really well, and you also live well below your means. I've seen both your cars. I know both your houses. You know what I mean? You're not slumming it per se, but you guys are doing you're living below your means. You're not, you don't care what other people think. So you're actually trying to build wealth and to leave a legacy down to your kids. So I respect that highly of you guys.
Yeah. One thing I do disagree with Richard is in terms of slow building wealth, because I have a lot of friends that are doing the right thing in terms of living below their means, but they just haven't taken the next plunge in terms of figuring out what to do with their investments. And they've been hoarding cash. I mean, compare what we're doing compared to people that are hoarding cash is exponentially different, right? And I don't know if you have, my parents they work hard, but they were just not savvy with investments, and they've hoarded cash all their life, and I'm not saying they're not well off, but they could be much, much better, right? So I think the big distinction is, I don't know which hurdle is harder, living below your means or taking that next level and learning about investing. Because, I mean, it seems like for the general American public, living below your mean is mission impossible already. But I almost think it's even harder to figuring out what to do with your investments and not be smart about it. So I think there's an extra level of education and that's required for people to take that next level. And it makes a big difference. You guys know compound interest, right? When it all adds up pretty quickly. So.
Yeah, so it's interesting. We were talking about it. My wife and I, we were driving and we were at a car wash in the Tri-Cities. And we were talking, and she's like, so you want to buy one of these, huh? I'm like, yeah, I want to buy one of these at some point. Seems like a good investment. And she was like, man, she's like, is it generational or what? How come our generation, we invest, right? And then we went over to her parents' house. And I think it's a generational thing, Randy. Like, at least my parents are just like you, immigrant. Well, my parents are.
Yeah, let's talk about first real quick. Tell us about who your parents are. Are you guys first generation? Set the stage a little bit too.
Sure. So I was born here in the U.S., so I'm first generation. My parents fled when there was the Vietnam War. So.
Gotcha. Go.
And,
I'm actually born in Taiwan, so I guess that makes me, I don't even know, first generation.
And I think your daughter would be first generation since you
my daughter would be first generation. So, but I moved here relatively early when I was 10. So I might as well have been born here. But yeah, both of our parents kind of immigrated to this country with very little. And I think the need for security outweighs their need to grow investments, I guess.
Cool. All right. So sorry, I didn't want to interrupt. I just want to set a good stage for that.
Yeah. So anyways, so my parents, it sounds like we're very similar to Randy's. Like, yeah, they were really conservative with their money, like there'd be $100 bills under mattresses, right? Like, stuff wasn't in a bank, they didn't even trust banks. I guess they had some 401k. Anyways, we went over to my wife's house, and her parents have been they're whites. They've been here for years, right? Their generations have been here. But like I guess like there's like, you do realize that like, one, you guys are, in a different kind of social class. Like we're educated, white collar, right? And she was saying things have changed. Like back in the day, it costs like, I think $50 just to do a stock trade, right?
Yeah.
And like with the internet nowadays, like there's like so much more education information. Like, most people can get access at least like minimum like stocks or something like that. Like they could invest in stocks. Real estate, yeah, there's certainly a threshold you gotta jump over. But I feel like nowadays more people have more investment like opportunities, at least with stocks. But I do agree with Randy that like when I talk to like other doctors, there's like this huge hurdle that has to be like, and it's like that trust or faith thing where they don't want to lose that dollar. Like they value that dollar so much. They refuse to like put it out on a limb to see if it can grow 10 cents or even like double like another dollar. And so when I see at least the physicians that I know, and it's a stereotype, maybe it's the guys that I know specifically, like locally around here, they're unwilling to invest, at least specifically in real estate, because they just don't want to lose that dollar.
You feel like they don't understand it?
Part of it's an understanding, yeah, but part of it's too, and I don't know, I'd be interested in hearing Randy's take, is that I'm willing to operate on a lot of unknown, if that makes sense. I know that I'm not the smartest guy, and I'm not going to know all the information, and I can't predict the future, but I can make some educated guesses and invest my money and see what goes. And I'm willing to, if it doesn't turn out well, it's my bad, but if it works out well, then hey, that's great. I'll do it again. Do
you think the doctors, and I'm giving it to you, Randy, same thing about the lawyers. Do you think they think they're too smart? They are too smart and they overthink everything? And from my reference point, my dad is a physician. My dad's a genius, and he's made millions of dollars and lost millions of dollars. he was a risk taker, but he just never, he was the opposite way. He always thought everything was super great and because he owned his own practice and stuff. So I understand the doctor world a little bit, but he's slightly different.
Yeah, I don't know. I feel like at least the physicians I know, we're like so worried about getting sued and like screwing up that like I feel like there's like got to be so much like information gathered before like people will act.
Gotcha.
That's just I don't know, Mike.
Yeah, those dirty lawyers want to sue everybody. Randy, what do you think?
Yeah, I don't think it's a profession thing. I think it's a personality thing. But I think there's a little bit about us being quote unquote more book smart and needing to find out what the quote unquote right answer is to succeed in our profession. Hence, with real estate, I'm sure you guys both know there is no certainty or the correct answer. So sometimes that doesn't jive well with the inherent education that we have. But I think more important than that is just the personality. Certain people just feel comfortable with that investment and putting things at risk. Certain people are not. I mean, when I bought my first rental in Texas, I had, gosh, how much was it? It was like 80 grand. I had to put 15 grand down plus closing costs. It was 20 grand. I was barely made it out of school, a bunch of debt. I had like 30 grand to my name. And then I put 20 grand on it, down payment on a rental that I don't even, I mean, most people are telling me I'm crazy, but that's kind of what, like Richard says, educated guess, right? It could have turned out really bad, but I think for the most part, I felt comfortable with it. I think it's a personality thing. And luckily for, I guess, people, audience of this podcast, I feel like we're all part of that demographic that are willing to take educated guesses and, we think alike. So I think the key is, if you're trying to kind of raise money with lawyers and doctors, you got to find the people that are in these, I guess, listen to these podcasts, because obviously we fit the demographic of the people that are trying to find investment that are interested. And then you can kind of figure out what their needs are. Trying to tap into general masses of doctors and lawyers, I don't think, going to the doctor's Tuesday night meeting or whatever is going to be helpful, just because I don't think everybody thinks that way.
And I'm going to add another profession in there. So tech workers. So I know over like in Seattle area, like these people that are middle, like some of these kids coming out of school are making 150 grand, 200 grand at Google. I mean, there's a lot of people making good income, 4, 5, 600,000. I have a buddy that sells $2 to $4 million houses, and these tech workers are able to put 50% down on these houses. And so I've had a couple of tech workers reach out to me before because same thing, right? They want to invest, but they don't know how to go get the deals, and it's so competitive right now. So that would be another person or group segment to look at. So say you guys have never invested before, okay? You don't own your rentals. You're the doctors and lawyers that we're talking about. In order for you to get comfortable, and get you over the hurdle, what would be a way for people to tap into that? Because say somebody's in a different market and they want to go after your demographic. And so they're going to weed through the guys that, obviously they're the bottom 50 that spend all their money. And there's probably 25 that might invest and there's 25 that never will. But how do they go get that group, one, meet them, and then two, start educating them and teaching them and getting them comfortable with potentially investing in a deal? Like, how would you go about it if it was you?
You'd have to network somehow. I think you'd have to network, however you like network to try to meet these people. You can put on financial talks. Like I met you at a real estate meetup, but yeah, you gotta somehow like get to one person to get to more people. I think, I guess alternatively, there's guys, I mean, this is a select group of people, but I mean, you have a podcast. And so some of these people are able to reach kind of the masses with, social media, I guess, with podcasts that they run. So that's maybe how I would probably start in terms of trying to meet a large group of physicians, to try to raise money. But ultimately, I think that like if you're meeting the people, you're going to have a pretty strong deal. I think you're going to have a really strong deal, something that almost has, I mean, you can't say never, right? But like almost no chance of going bad, going sideways. And then I think it starts off with just the first, that first deal. Like I wouldn't have ever, like, I don't know if I would have invested in real estate unless I was forced into it. Right. Like I was forced into it, and I was like, well, that wasn't as painful as everybody told me. Like, Randy was saying that people were telling him he was crazy. Well, I had no option. I had to keep it unless I wanted to take a massive haircut. So
like, what are the doctor's watering holes? Like what kind of, and it doesn't need to see a specific, like we all of us like golf, right? So golf is a very good tool, but like, what are your guys' typical watering holes?
I don't think that's a good place to go, just because if you go to a typical doctor or lawyer watering hole, 50% of those people have already spent all their money. Out of the 50% that's left, 25% will never invest in anything. And then maybe have 5 people in there that's potentially investing or interested in looking. So I think if I were you, I would focus on the meetups, the people that have already shown a little bit of interest. And then I think tapping into those, it's the 80-20 rule, right? You don't want to spend your time tapping into 80% of people that will never invest anyways, right? So I think I would focus my attention on people that are showing up to the meetups, because obviously they have shown an interest. And then I would definitely build relationship rapport with them. And with respect to the specific deals, I think you just gotta, safety is for them number one, like Richard said, but you might have to leave a little bit more meat on the bone. Kind of like when I first started lending money to you, you told me you had people that you could probably lend and only pay 8%, but you're willing to give me 10% just as a, hey, we're building a relationship, we're building some trust here. So, and then, I think everything that you have already done, being the guy in these circles, I think is probably more helpful than quote unquote going to the lawyers / doctor watering holes or the golf courses, just because, like I said, most of those people will never be your target demographic anyways.
Yeah, my dad has told me for years, he's like, go rent a space, go put buy a bunch of food or something and just put on like a financial talk of like, you're not even pitching any deals. You're just kind of like educating people and get somebody to, find a way to invite some of these people that have money to invest and just start the education. And just start talking about it and getting people comfortable and, giving them things to research. What are your guys' thoughts on stuff like that?
Yes, it's helpful, but I don't know.
Well, to start building that relationship with those type of people.
Yeah, but sometimes when you throw out free, you kind of attract the wrong kind of demographic.
Well, I wouldn't. Yeah, you would be a select invite.
It's just that's a slippery slope. I think. But the problem with these meetups, and I'm sure you guys have gone through them. Most of them are.
I run one.
Yeah. Well, I don't know if yours is one, but a lot of attendees are ones that really will never do a deal.
Correct. That's 90% of the people there will never do a deal ever. So
it's kind of hard weeding through that mess too. But I think once you find the right one, you got to make sure you cultivate that relationship, and they have more ability to convince their friends than you ever will. Right. I've already convinced one of my friends to kind of lend Elliot some money on one of his projects.
Yep.
So I think that's kind of how it starts. It doesn't happen quickly though.
Yep.
It's definitely a long process, but once you build that relationship, I think it's going to be helpful.
Yeah, I agree with what Randy said. Yeah, I don't know if like the education, because I think that you get like kind of like looped into the other people that are doing quote education for physicians. Like we get hawked like the insurance guys, right? Like the insurance guys, and I don't know if you want to be hawked into that, like lumped into that like cohort of people, because I think that doesn't help you. And I think it just starts with that first good relationship where somebody has a positive experience. Like my friend down in Florida, I met him through my in-laws, and he was like, I thought he was crazy at the time, because when I first met him, he was like, you just need to buy. I was like, hey, what should I buy? And he was like, kind of just point in any direction and just buy something, Richard. And I was like, excuse me,
That sounds terrible, but okay.
Yeah, this is right after the crash, but like, yeah.
So he knew that it was going to come back. Yeah, that's what he was saying.
Yeah, that's what he was saying. Yeah, sorry. So yeah, I met him like after the crash.
Gotcha. Okay, I thought he meant like last year or something, right?
No, sorry about that. Yeah, and so he was like, here, how about this? I'll find you something. He's like, that you guys can get in comfortably. Let's run some finances. I'll just kind of just show you everything. And yeah, so we bought a deal, and he's like, yeah, you own everything, so you just control everything. He's like, you control everything. And so we bought a deal, and it worked out great. And I was like, okay, I'm feeling a little bit more comfortable. And so we progressed and bought some more stuff, over time. So
the hard thing that I ran into, because we were doing, for reference, last year I pitched Richard and his group a deal. We raised the money, it fell apart. We re-raised it, and then it fell apart again. So, but great learning lesson for both Richard and I. We kind of were both kind of blind to this thing. But I started doing a monthly Zoom meetup. But the problem I ran into was I was talking to these people, and we had a good amount of people show up at the beginning, but then I didn't have any deals that I needed money on, right? Because one, for us, we don't put, just because I have people that say they want to invest money with me doesn't mean I'm going to go find a deal just to put money somewhere, right? I want to make sure it's the right deal. And so, how do people manage that relationship when it's just expectations with, with you, Richard, or you, Randy, and saying, especially with you, Randy, because I said, hey, I'll try to get you in a deal sometime. And it took 18 months until we actually found a good one, right? And so, how do you manage that expectation? I struggle with that personally as well. Now I have a bunch of deals coming up, and it's so what do you do?
I wouldn't worry too much about it. If the deal's juicy enough, I think the investor will come begging more so than you need to say, hey, I haven't talked to you in 2 years, so do you still want to invest with me? I think that if, like I said, if the deal's juicy enough, I don't think any savvy investor will turn it down if the right deal comes along, right? So, I don't think you need to kind of call them every 6 months just to say hi per se, just because if you don't have that kind of relationship, you don't need to force it. Just recognize, hey, this is the money guy relationship, and what he's looking for, and what you're offering, if it's mutually beneficial, I wouldn't mind that if me and this guy never talked for a year, as long as he calls me when the right deal comes along, I still treat him as a valuable asset or whatever. What do you think, Richard?
Yeah, no, I agree. I think it depends on what they're looking for, right? Are they looking for yield? Are they interested in doing a syndication? Are they looking for limited liability, or limited partner? Are they looking, like Randy said, to have a little bit more control, to have a little more peace of mind?
It's debt versus equity.
Yeah.
Right.
Yeah.
Debt versus equity. So 10% loan versus Randy gets equity. Right.
Yeah. And so, I know that, I think that I know that Dealz, it's not just clicking on a mouse, buying stocks. It's not like it's there all the time, and it's gotten harder, right? We all know that it's gotten harder to find deals. And so, I agree with Randy. 2 years could go by, and I have friends that call me up, and I haven't talked to them in a year, and they're like, hey, how's your real estate investing going? Do you have anything that you'd be interested in and partnering with? And sometimes I have something, and I'm like, well, I have to kind of weigh, do I want to have a partner or not? So yeah.
All right. Well, it's getting late, guys. Do you have any final thoughts of things that we didn't cover? I appreciate both of you guys coming on greatly. I think this has been really educational for people to listen to.
I think the takeaway is it's a relationship business, as I'm sure everybody has already emphasized that real estate. I think not just on the deal side, but on the lending side, you got to build relationship with people that are willing to invest. And the hard part, I don't have an answer to it, is finding the right people in that sea of lawyers and doctors, half of which spend all their money, the other half never would. The rest, while we'll never invest anyways. Finding that right person, and realize that their money. I think people that work for a living versus people that are in real estate view money very differently.
Hey, I work for a living. Just because I'm in real estate doesn't mean I don't work. I know I take naps in the middle of the day, but come on.
People that get W-2s versus people in real estate. I think to you, 100 grand, 200 grand is part of the working capital. You feel like, okay, fine, this is going to cost me 200 grand, but I know I can make so much on that. But for people that get W-2, to ask them to part with 100 grand is a big ask.
Yeah, and let me preface really quick just to make your point. So I was talking to Richard before you jumped on, Randy. We have this 13 unit that we're going to be building in this lot, and I talked to the guy last year about buying his lot next door, so then we can get a 26 unit on there. offered him the same amount. He said no. Well, he called me back, and we had paid $140 for that house to tear it down on our lot. And I offered him tonight $195, because the market's gone up, and he's like, I want $300. I offered him $280, and it's like I just jumped in the span of 5 minutes, $90,000 because it makes sense for the deal. And to me, I don't even blink twice. Like I don't even think about it because I know that yes, I'm overpaying for it probably, but the blended average of the deal, it makes the deal a way better deal to have that piece of property, right? And so, yeah, but I didn't blink twice when I raised my price $95,000 or $90,000.
Yeah, to get someone that's getting a W-2, $100,000, probably at least 6 months of their income, if not more. It's a big ask, so you gotta treat it carefully too. Just because you throw $100,000 around like it's not a big deal. I think to people that get W-2s, it's a serious consideration. They gotta be extra. They gotta feel 200% comfortable with you before they hand you their money.
Yeah, I think just to build on what Randy said, us W-2, I mean, we went to med school and law school. We didn't go to business school. And I mean, you got to realize like there's a huge difference. I mean, it's like Democrat and Republican huge in terms of like the knowledge of like business and like, yeah, like Randy said, working capital and like money and finance. Like your understanding of finance is like way, like it's leap years way ahead of me, right? And so, yeah, when you're like, oh, when we went through the deal, last year, and you're just like running through the numbers, I'm like, slow down. Let me get my piece of paper and pen. Yeah. And I'll call you guys back in a couple of hours as I digest this information, right? So
that's a great point for people. Slow down, and not that you guys are kindergartners, but I think you told me at one point, talk to us, explain it to us like we were in 5th grade or something, like make it make sense and slow down because you don't understand it, right? And people that, same as if you're going to talk to me about radiology, or Randy's going to talk about patents, like you're probably just boom boom boom, I'm going to be like, I don't even know 90% of what you just said. I feel like you're speaking Taiwanese or Vietnamese or whatever, right? You don't understand it.
Mm-hmm. Yeah. Like, I'm going through this like deal down in Florida right now. And a friend called up and said, hey, we really want to invest. And I was like, okay, it's a really crummy deal. I'm buying in a place where I think it's going to appreciate. And so I think does not mean equal, right? Like we could lose a bunch of money on this thing, but given the location and what I think is going to happen, blah, 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 blah. But, it took a while for me to go through that. I like ran through my spreadsheet and I like, showed all this information, And at the end, they're like, okay, no, we have like a better understanding. And so I had to like really, really break it down. Yep. So
awesome. Well, guys, it's almost 10 o'clock. We had to do this late tonight. So thank you so much, both of you guys, for coming on. I really appreciate this. And again, thanks for all you've done for me. Richard, hopefully we can get a good one here up soon. And Randy, thanks for all you do. So thanks, guys.